Yeah, so everyone, we're gonna start our next portion of the program, which is the floor Q&A. So I think the way we're going to conduct this is ideally you could type your questions on your mobile phones and send it to Slido. So I think there are instructions laid there on the tables. But actually, if any of you guys would really have burning questions you want to personally ask our panelists, you may also just raise your hand and our customer experience managers will approach you and help you ask your question. Okay, so let's get the ball rolling. Maybe we could see the first question that we have from the audience. All right, so this is from Mr. John Nang. On a technical point of view, how do we identify the start of stage 2 if we are currently in stage 1? What price levels should be watching? Thank you. All right, maybe Boss Edward can.
You know, I think I presume John is an active investor, or he would also be an active trader. No? So just to explain how we do this. No? The biggest challenge is that when you're participating in stage 2, from the bottom to resistance, it's about 20-30% already. That is where Juanis will start looking at it. Once it starts reversing and then quieting down, that's the beginning of the bull market. Now you have to remember, when we're wearing a hat, we have to look at everything. Because we also participate in what we call the capitulation mean reversion, even in the US. Even in the US, we need to do that. No? So in other words, why do we do this? I mean, most technicians, Juanis, you have to correct me if I'm wrong. Most technicians will avoid what we call stage 1 and stage 3. Right? Kasi stage 3, mahal eh. Diba? If it's expensive, I don't know if you have time, go to our lecture. We talk about it in it's the stage 1, 2, 3 is all about the quadrants, the different quadrants. Eh. So we give that kind of talk for a long time already. So if you're in quadrant 1, which is indirectly parang stage 1, we call it the weak bear. Kasi you're coming out from a strong bear, stage quadrant 4, and quadrant 1, it's what we call a weak bear na. And then it only reverses, becomes strong bull, and then when it's expensive, we call it quadrant 3, which is what we call a weak bull. A weak bull is overbought swing trading, buy low, sell high, buy low, sell high. So we have to wear those kind of hats. Eh. We have to know all the different sentiment. The quadrants are basically sentiment. Stages are all about individual issues. But quadrants, it's all about weak bear, strong bull, weak bull, strong bear. Right? So we need to understand that. So when there's a strong bear, which is what's happening in the US, because rising interest rates, it created the sell-off in the S&P, the China Tech, all these things, quadrant 4. After that, from that, the problem is you don't know where's the floor. Hindi natin alam yan. Kung alam natin, palagi ko sinasabi, mayaman na tayo. Hindi natin alam yan. But you have to wear that kind of hat. Capitulation, mean reversion, or differentiation between rational and irrational selling. Kailangan you have to know these things. And these are all available, by the way. We teach this. The sad part is when we teach for free, it's just nobody's listening, right? Kasi we don't charge you. Yan ang problema talaga sa COL. Kasi COL is all about advocacy, continuous educating. The sad part is since we don't charge anything, people don't value what we're saying. That's the sad part. But in reality, we've been giving this kind of a lecture for so many years now. So understanding where you are, today the US is what we call the weak bear, right? Strong bear, we don't know kasi strong bear, nag-weak bear siya, di ba? So weak bear is all about buy low, sell high, which most technician, kasi sila Juanis basically are more efficient. They want confirmation, then participation. So a lot of trend trading on the way up and on the way down. Kami, we have to wear all kinds of hats. We have to wear. So in the US, we are participating in a lot of these issues that have gone down 80-90%, which we classify as young growth. Ang young growth, ibig sabihin, burning like hell. They're still burning. Wala pang profits yan eh. So we are participating in those. bottoming out process. Kasi the volatility of those issues are so big, I can scout it. But it's a much difficult job, right? So you need to understand, and even our traders, sometimes it takes time for them to understand what we do, right? So from a weak bear, stages going to the beginning of the stage, quadrant 2. No? Now, for us, I think the question is, how do you know? We use a lot of moving average. I use a lot of moving average, right? So the problem is when you're moving our capitulation, mean reversion to the moving average, it's already 20-30% in a lot of issues. In the Philippines, it's totally different. Philippines is totally, because the Philippines is more mature growth, mature companies, right? Hindi naman mawawala itong mga kumpanya ito. They've been there for 50, 100 years. So we always look for opportunities. So it's a lot of swing trading. Yan ang ginagawa namin. No? Now, what we do is weekly. There's a weekly chart there. Danes?
Dane.
There's a weekly chart that I have for the Philippines. So, Juanis showed it. So, in other words, Juanis is showing from stage 4, indirectly that's quadrant 4, rallied, which is the beginning of quadrant 1. Diba? Kasi quadrant 1 is still buy low, sell high, buy low, sell high. Then, we're just making that call. The interest rates come down. This thing is going to break out. Yes. Is there, I think, something wrong with my English, no? Baka hindi nyo maintindihan, ha? John? Where are you, John? Wala? John? Nawala? Mr. John ng Beijing.
Maybe you went to the restroom, boss.
So hindi ko nasagot. I don't know. Anyway, you guys can ask me all the questions. I will try to answer it. But so we wear sentiment hat. We have to know where we are, and then we use. And the reason is we use a 10-year just to be able to identify where we are. And if the 10 years coming down, we just believe that. Of course, it has to be confirmed with the group of April, the group of Charles. Whether kung mura, hindi mura, we need to know that.
Maybe, boss, this is a quick follow-up question here. So, like, let's say for someone who's a bit more, like, to make it easier visually, and if you're less advanced and technical, and maybe Juanis can chime in. Could this also be just as simple as if you see the price break above the 200-day moving average, that tells you, and then maybe it stays there for a couple of days? Could you say that's start of stage 2 already? Or could the start of stage 2 actually be even before you see that crossover?
I don't wanna.
Okay, maybe let's look at it this way na lang. I mean, for those who are technically endowed, there is this thing called an Elliott wave. Edward is trying to point out breaks the market into 4 phases. Because the reason we want to do that is because we want to know what trading style should I use. Because if I'm in stage 1, that means things are beginning. You cannot be aggressive. That's why he's saying, buy low, sell high, buy low, sell high. When the market begins to accelerate and you see what is known as a stronger bull, you get momentum inside the market. It starts to rally much faster. Your buy high, sell high may not work anymore because you probably just want to buy and hold, right? And you will only sell when it really is super extended already. And that's about the only time we wait for major corrections inside. And the other way, if you're using Elliott, is that if you're in wave 1 of an Elliott going to wave 2, maybe up to mid-level wave 3, I would consider that the beginning or the stage 1 process changing now into the stage 2 process. So that at least you know where they are. And I would agree with what you say. So if you're breaking over the 200-day, you're staying over it, that shows you already a good chance that you're coming out of that stage 1 process. At least there are indicators you can use to confirm what stage you're on.
All right. Okay.
Did I pass your...
I understand your English.
All right. Thank you for boss and Juanis, our technical experts. Maybe we could move on to our next question. All right. A very interesting and timely question. So especially since we have such rebalancings coming up. What's the impact of FTSE rebalancing on PSE stocks? What factors are considered when adding or delisting a stock? So maybe this doesn't necessarily just pertain to the FTSE. I think upcoming is the PSEi one. So Just in case for some of you guys who don't know yet, I think it's Feb 6. Union Bank and DMCI are in. RLC and Mega World are being taken out. And then there's also a February 9 MSCI rebalancing that's upcoming. But I guess this is a general question referring to rebalancings in general. What is the impact of those on our listed stocks? And what are the factors considered when these guys actually add or delist issues?
So I guess this is my... Anyway, iba kasi yung considerations. For the PSE, it's easier. It's the free float market capitalization. So in other words, the bigger the company, the easier it will become part of the index. In layman's terms, yan. Plus, of course, kailangan chine-check nila how active the stock is. So, there's a rule where you have to be, naku, hindi ko nakabisado, top 20-something for you to be included in that index. So, it's a little bit harder to be included than to be removed. Yun. So that's what it is. If a as you notice, let's say, for example, yung mga DMCI, Union Bank, di ba, when they became more active or the price went up a lot because of strong commodity prices, then they will be added. Tapos pag yung isang stock bumaba, tatanggal siya. So yeah, for the MSCI, it's there's an impact also. Well, it's also free float, market cap, and also the value turnover. But on top of that, they also look at the foreign ownership limits. Because, for example, in the Philippines, you can only own up to 40% of most stocks for foreign investors. So let's say if the foreign ownership is already very high, tinatanggal na rin nila because the foreign investors cannot buy that anymore. So they remove it. But yeah, I think right now that is not an issue. The focus right now is the value turnover and the market cap. And unfortunately, well, lumiliit. But, what is the impact of these rebalancings? Well, if a stock is removed from the index, you have to realize that there are a lot of funds who, what they do is, okay, if I'm a fund manager, usually my performance is compared to an index. Let's say it's MSCI, FTSE, or PSEi. And my role as a fund manager is to outperform that index. So what I'll do is, let's say I have a list of the stocks that are part of the PSEi. I will just copy what is the weighting of those stocks in the PSEi. Let's say stock SM is 10%. So 10% of my portfolio will be SM. And then, of course, so on and so forth until you get to all 30. And then to outperform, what I do is instead of 10%, if I like this a little bit better, I'll do 11%. So, but if that index, if that stock that is part of the index is removed, I have no choice but to sell it. So, ganyan siya. That's why if a stock is removed from the index, a lot of the professional fund managers have no choice. They don't even think about the fundamentals. They just sell. Okay, and then if a stock is included, they also don't have a choice but to buy. So that's why we're seeing these aberrations, no? Which, of course, us as retail investors, we don't have that limitation of following the index. That's why we can take advantage of the opportunities that are presented. So if a stock is removed from an index, we can buy and then we'll make money. If they will be included, we can sell and then just buy back.
All right. Yeah, thank you so much, April. So, quick summary. If a stock is deleted, you view it as a potential buying opportunity. Of course, the timing is not as easy, but in general, prices will be low. So, look to try to accumulate the stock. So, I'm hearing that we're getting a lot of questions actually from the audience. So, I would encourage our panel to actually shorten the answers a little bit so that we could go through a lot of the questions that we have. So can we flash the next one, please? All right. Could be a controversial question. Will the Maharlika Wealth Fund be a good catalyst to the Philippine stock market? So maybe, sige, maybe Boss Marvin could be the one to answer.
Maharlika Wealth Fund. Now, the Maharlika Wealth Fund will not invest in the stock market, so it's not direct. But if, for example, Maharlika Wealth Fund really pushes through and we get a lot of investment, eventually, probably eventually, but maybe not right away.
All right, not right away. Okay, can we show the next question, please? All right, this is a specific question for Juanis. So on a risk-reward basis, do you think the swings in this market recovery will cover the cost to trade the stock? Or do I buy on weakness and hold? So this is from George.
Yes, I do. That's why maybe in the short term, there might be some limits. That's the reason why we're asking you to wait for a pullback to buy. But after this, yes, I think markets will climb back even higher. So that should easily cover your costs. So that's why we're here to recommend a more bullish approach, because we feel the potential of the market to climb later is very much there. So don't worry about the cost.
All right. Okay, I think that was clearly answered. Could we go on to the next question, please? All right. Specifically for Boss Edward, what do you think of the recent insider selling that we've seen in SM Prime and Jollibee? What does it indicate? So I think, Boss, we're seeing net foreign buying in these two stocks. And yet, I think for Jollibee, the CEO and the chairman sold. And then, of course, on SM Prime, Big Boy sold some shares. So what does this indicate?
That's a very good question, and it has been asked to me for the last couple of weeks. Normally, I mean, we really don't know why they need the money, right? But sometimes, since they've been holding the issues for so many years already, so they feel that there's some foreign buying. That's the only time they were able to top slice it. In fact, they're just top slicing. The bulk is that they're not liquidating anything. No. So I think it's just normal. If you have been holding the stock for quite some time, your family, and you need to do some other businesses, you will definitely top slice. Kasi like for example, what Big Boy sold in SM Prime is really very very small lang eh. Kasi it's more than 20, 30 billion in terms of his portfolio. So he's selling a few hundred million. It's really nothing. But this is a very good question also. Let's look at it on the other side. When there's a capitulation, deleted, for example, foreigners selling, and you see insiders that have never participated and started buying. That's why we recommended SM at that time, because even the chairwoman was buying back at 780, 790. That's why we look at that more closely. No? So participating in insider buying when corporate buybacks during huge discount that are being sold by the foreign. Yun ang gusto natin. No? So you should look at that, which is very good. It's a very good question. Selling, yes, it will. There's some issues that are expensive. For example, if it's expensive, then you might want to top slice also. No? Sasama ka siya. Kung mahal siya. Pag mura, you can hold on. Wala namang problema yan.
All right, great. Very clear, boss. Thank you. Can we see the next question, please? Okay, so this one is a bit more stock specific. What are your takes on Security Bank, GT Capital, Mart, and IMI? Should we sell these at a significant loss or hold on? So could be attacked on various facets. Maybe we'll go on to the fundamental one first.
Okay, I think Security Bank, GTCAP are still okay. IMI, baka pwede pa rin. Well, when it did an IPO, it was really expensive naman because it was just starting out. So, tingin ko matatagalan. Between the three of them, mas may pag-asa. Security Bank, GTCAP, and IMI. Yeah.
Let me share with you the one who's asking. Security Bank and GTCAP are basically, companies that are big. Malaking kumpanya yan eh. Yung Mart, it's like a startup eh. Wala pang kinikita yan eh. Diba? Startup yan eh. So it's a very different. IMI basically is cyclical issues. So you need to identify that. You have to learn how to, each one of you're here. I'm sure you're basically very focused on what you're doing. That's why I think you're invited here. What is really important, you need to have a checklist kailangan. Diba? So Mart, of course, When you are able to subscribe at 1, then okay, then it was speculated on. No? But today, they're still expanding. So yung cash flow niya, sa tingin ko, mahirapan pa. No? Pero, yeah. So it's a startup. Berrymark is a startup. Hindi pa young growth yan kasi revenues niya wala pa yan. So, diba? So IMI, cyclical lang.
All right, thank you, boss. I think we have a question from the floor, which Mai will read out.
So this question came from a client. Is China reopening inflationary? Charts of oil bottomed when China announced it was abandoning its zero COVID policy. China exports goods but imports commodities. In a high inflationary and recessionary environment, people buy commodities instead of goods. China would be consuming more commodities and those would be lower demand for goods from them. Isn't this inflationary? Has inflation really topped?
I'll try to understand. The biggest problem is during the pandemic, when China closes, that's the inflation. That's where inflation came in. Kasi, di ba, they're exporting all over the world, right? So logistically, di ba, wage inflation, logistics inflation, di ba, yan yung biggest problem. Right? So the reopening is gonna, di ba, just gonna look at normalize their operation. It will normalize the operation. So yes, some commodity prices might go up, pero overall, it should be better for the world, right? Kasi di ba, nagbukas na sila eh. So dati, grabe. They'll be enclosed in a factory. They'll be, so the cost really went up to the moon. So by opening, it should be better, much better. No?
Yeah, so the reopening of China will address the supply chain bottlenecks that is causing inflation. Yeah, and admittedly, maybe commodity prices are going up because of that. But that is also partly due to the weakening of the dollar. So, hindi naman siya ganun ka-clear if it's inflationary. But then again, if you think about it, the issue about inflation really is the, supply disruptions talaga. It's a supply-driven inflation, the one we're seeing because of the pandemic. Usually, if you have pandemics, calamities, yung mga ganun, wars, it's supply. It's a supply-side driven inflation. So hopefully with the reopening, supply normalizing, logistics normalizing, then we'll see less inflation.
I think the person was asking, so what? The U.S. inflation is coming down now. Coming down already because there probably be a recession, thinking that there's going to be a recession, right? So a lot of layoff going on. So it's just isolated lang yan. I think the Philippines is more worrisome. And of course, now our sibuyas is back to 200 pesos. Baka may laban na. No? Mga sindikato lang yan. Ganun talaga.
All right. Thank you. Thank you for that, boss. And this next question probably actually is related to the previous one. What is your outlook on mining stocks? So of course, if that China inflation actually does happen, of course, commodities are the one that will be affected. So what is your outlook on mining?
I've been in mining stocks in my early years, and I've done very well. The sad part, the mining today is very challenging talaga. Very challenging, except for maybe the Nickel Asia, all the nickel is much better. As far as copper, gold is concerned, it's most challenging. No? So the capex is just so expensive. And then I always, when people ask me, I shared with them there are 5 to 6 challenges when you're operating a mine, just to be able to, it's all about environment. First, you have to worry about the environment because it will be challenged. Number 1, by the church, right? Number 2, if you are in the provincial areas, you can be challenged also by the NPAs. Extortion, di ba? So you have the church, extortion, government policy towards it. Can be open pit, di ba? Kasi kung hindi ka nag-open pit, diretso ka sa baba, the cost just goes up. The open pit is basically to start having a cash flow, then eventually you go deeper. No? Indigenous people. So maraming challenges talaga dito. Maraming challenges. So that's why we are lagging in terms of copper and gold. No? But in terms of at least the nickel, it's much better, much easier. No? So coal, yes, we call the Semirara is what we call the Saudis of the Philippines. So imagine they're making 40, 50 billion. But this is because of what happened to the Ukraine war. So it created artificial high prices. But forward futures price has gone down already. So that's why when they ask me about Semirara, yes, it's cheap. They continue to give cash flow. But when commodity prices goes down, and which we think in the next few months, that commodity price, I say we can see from the future, because the spot is still higher. Pero the futures are basically selling at a huge discount now. So kasi it was a mild winter in Europe, so most of them have hedged their coal prices. Today, ang bilis bumaba na yung mga future prices nila. So I hope I answered the question. It's really a challenge to build copper and gold. But for mining, nickel mining, I think that's the future. May future yan.
Thanks, boss. So maybe at least the industry itself is challenged, but your top pick, if ever people are gonna trade it, Nickel Asia.
Yeah.
All right. Okay. Sige, boss. But maybe Juanis.
Wait for the pullback lang. We're all quieting down. Ay, kasama namin sila Adrian nun sa Nickel Asia. So, may bias.
Juanis, you want to chime in on the technical? I think at least some of the charts of some of the mining stocks are looking constructive.
Yes, because some of them are following the movements in copper and the recent appreciation in gold as well. That's why we've seen some selective rallies into the mining sector. But I agree. I mean, please watch the flows of volume into your mining companies. Okay, that way you can tell whether is this thing just going to dart up all of a sudden, no more volume, then next thing you know, it just trickles down for a very long time. I think many of you have felt that many times. So you have to know which ones. But unlike, of course, Nickel Asia, Semirara, there's continuous trading flows inside. So kung magkamali kayo, pwede naman kayo mag-exit. So you can always
may cash dividend doon. May cash dividend. Malaking cash dividend. Magpaipit kayo, okay.
But I agree with Edward, the chart of coal has already consolidated after coming from a top. So that alone should prevent the appreciation of issues like Semirara based on a commodity rise. So ingat lang doon.
So if you're looking at commodities, it's easier. So you can, if you look at the coal prices today, is it quadrant 1, quadrant 2, quadrant 3, quadrant 4? So we think that it's at quadrant 3 transition into quadrant 4. And the future prices are already telling us that now. So that's the reason when they asked me about Semirara, I said, it's a good company, they're making so much money. But then if commodity prices comes down, sa tingin mo, bababa o hindi, di ba? I don't know. But I see insider buying. Nakikita ko siya, the president is buying back their shares. Kasi they've sold a lot on the top. So at any price, they can buy back. That's the advantage of the insiders, basically. When it's expensive, at that time, when it was being included into the MSCI, there were top slicing. Kaya when deletions comes in, you need to watch it. Kasi the insiders are ones selling when it's expensive. Pag bumaba, sila nagbabuy back.
All right. Awesome. Great advice, boss. Thank you. Can we move on to the next question, please? All right. Thoughts on AREIT, please. Saying 10 to 12% return and regarding alley trading property for 44.85. Valuation of AREIT.
Okay. So, first, let's look at AREIT from the pool of other REITs. I think AREIT is, well, my favorite, of course, is CREIT because it's power. But the second favorite is AREIT because among the property REITs, of course, it's the Ayala name plus, of course, the parent and then the more diversified portfolio, not all offices. Okay, the valuation, well, the yield is, hindi ko memorize it, a little bit lower compared to the other REITs. Okay, in general na lang, let's talk about the potential challenges of the REITs today versus the time when they IPO'd. Ang ginagawa ng mga REITs for them to grow is they acquire properties. And the favored vehicle is not buying it in the market, because if you buy in the market or you buy the assets of your parent using cash, you have to pay capital gains tax, VAT, and the works, which of course nobody wants to do. So the preferred route is to do the tax-free exchange. But you know, for it to be attractive both to the parent, which is Ayala Land, and to AREIT, the valuation of AREIT has to be high. Meaning the yield has to be maybe nasa 5% lang, mga ganyan. Para yung exchange ratio will be favorable for both Ayala Land and AREIT. But unfortunately now, because yun na nga, the prices of REITs have gone down, medyo I think there is a chance that these companies will pause any tax-free exchange transactions because, di ba, ang promise lang naman ng mga REITs is if we buy any property, our dividend yields have to go up. If your dividend yield right now is say 6-7%, so that means tatawaran mo yung property ni parent. Sabihin mo, oh, I can only pay you say 18 times PE or 20, yung mga ganun. Basta mas, hindi, magiging 13 times, 12 times, which is very cheap for them because usually if you have a rental portfolio, you want to sell it at more like 19, 20 times or even 30 times PE, di ba? So baka walang mangyaring asset injection in the short term while the prices.
What about, April, on the rent escalation side, at least for the REITs? Do you see it kicking in, so at least to offset the lack of asset injections?
Okay. The rental escalations on existing contracts will still be there. The problem is for those that are expiring and need to be repriced, they will go to the market rate, which may mean because the market is has a high vacancy rate, it could be lower than what they are getting right now. So may ganung threat or baka flattish. It might be a little bit flattish.
Okay, so yeah, thanks for that. So REITs may at least be challenged for the short term, but of course yields are also attractive. So
I have one comment lang on REITs, no? Please, it's inverse correlated. So interest rates going up, the REIT will go down. Pag interest rates comes up, the REIT will go up. Ganun lang. Inverse correlation.
yeah, thanks boss for simplifying. All right, the next question for Juanis. All right, I think we might have answered this earlier, but if Juanis could reiterate, how durable is golden cross formation in signaling reversal of a trend? Is this the signal to deploy excess cash to buy and hold if I have a 1-year view?
It's supposed to be a durable trigger because, like I said, it waits for an extended period of recovery before they give you that signal. Now, the only thing I will inject is that the only problem with this is that by the time that golden cross comes, your stock price had already gone, or index have already gone up by quite a bit. So if you're using the golden cross as a buying trigger at that moment, you might be a little late. Okay, so that's the only thing I would caution you. But does that mean the market will continue to go up? Yes. But in the short term, it might need to yank itself down, correct. After that correction, then you buy it. Because I think later on, the effect of that golden cross, which is really the crossover of a shorter term moving average over a longer one, should be durable in itself. So in that 1-year view that you have, I think you can do it as long as you buy it right. If we're talking about today's market, buy it after the pullback. And then before that 1 year, I'm sure you'll be making money.
All right, thanks, Juanis. Very good advice. Yeah, so you don't have to be all excited to just buy it in right now. So maybe wait for markets to quiet down a bit more and pull back. All right, so to Miss April, what do you think of Vista Land, Cebu Pacific, and Lusiotan Group? Are they good picks for value play from SGT?
Well, they are cheap, pero the main issue is, we're still early right now. So since we're early in the game, I think let's focus more on the larger cap issues. Kasi usually what happens is, it will be the larger cap issues that will go up first. And then pag wala nang mabili, then that's the only time the money will flow into the other issues.
All right, pretty clear.
So
Thanks,
it's all
April.
about rotations. No?
Yeah.
All right, thanks. Can we have the next question, please? All right. Just want to ask, aside from the US Treasury sa PH, ba meron pa other indicators para malaman if yung PH fund managers nasa equity or bonds lilipat ng fund nila? All right.
Marvin.
So,
Question is paano malalaman if fund managers
switching na.
nagsuswitch na.
yes.
It's not the US Treasury, it's the Philippine 10-year bond. Tingnan nyo yung 10-year bond. Kasi the 10-year bond is the more or less the indicator. Usually kasi fund managers, not just fund managers but also institutional investors like insurance companies, may target yield yun eh. Mga 4% usually on the low end, mga 6% on the high end. So yan yung parang, you say bogey. So pag bumaba doon, if it goes lower than that, that's your more or less indicator na wala na kikitain sa bond. They will have to take more risk in order to get that kind of a return. Kasi that's a target return eh. I don't know if you know, like insurance companies, they have to pay for your insurance in the future. They have a actuarial valuation. They have a projection of about 4 to 6. Nandun yung bogey niyan eh. So that's your kind of indicator where they will move. Now, for the fund managers that have also mga benchmarks, as I said April, may mga benchmarks silang nilalabanan dyan eh. They look at Philippine Bond Index and then they look at Philippine Stock Exchange Index. Meron naman din indicators din doon na pagka if that thing suddenly drops, medyo naglilipat na sila eh. Naglilipat na sila. So, those things lang muna. Thanks.
All right. Thank you, sir. Can we move on to the next question, please? All right. So for a time frame of 1 year, what do we focus on when technical analysis and fundamental analysis disagree? For example, when fundamentals say bargain, but technicals say strong downtrend and vice versa. Very interesting question. So when technicals... Yeah.
There is no what we call the one, you can mix both. And I've been explaining that so many times already. So let's try to, Juanis will simplify it for me. But, the biggest challenge is that most people, parang gusto mo yung may answer ka na. It's quant, fundamental, technical, you put it together. In the Philippines, it doesn't work. The reason is because we're inefficient market. So really, please do your homework. Understand what you're buying and understand when to participate. And I said a while ago, so many times, when markets are capitulating because of inefficient market, because of the move of the passive funds, that stocks are being deleted, added, you need to participate. Kasi these are good companies naman eh. So, in other words, technically, pangit, di ba? Nagkakapitulate, falling knife, hindi tayo pwede dyan. But we're wearing the investing hat. That's why, trade what we see when it's expensive, trade what we think when it's cheap, especially in an environment like the Philippines. We like the Philippines because you think that you cannot make money. In fact, you can make a lot of money in the Philippines because that volatility will create opportunities for us because these are good companies. Hindi naman basura eh. Wag ka lang magbasura. I mean, then that's different, right? So, wearing that fundamental is very important. Wearing that fundamental, you need to know the companies you're participating on. But understanding technical, kasi for technical technicians, pag nagkakapitulate, falling knife yan eh. Ayaw nila yan. Ba't tayo gusto natin yan? So, I think it's really very challenging. So, as a technician, ang tawag na, sorry Juanis, pero hindi ka trabahong tamad kasi ang tawag namin sa mga technician, trade lang, puro trabahong tamad yan. You're not doing your homework. You need to do your homework. Because if you don't do your homework, my God, di ba? Kasi gusto mo, pagbili mo, akit na eh. That's expectation, di ba? Kami, different. We have to understand everything. And the nice thing about the Philippines is that it's different. Kasi fundamentals very important. Pero you need to do your technicals during capitulation, kailangan nandyan ka. Kasi wala kang dyan, kasi pag after the selling ng mga fund managers, absence of seller na yan eh. Mean reversion na yan eh. So vice versa yan. Let's say nag-a-addition sila. So participate. Pag tapos ng buying, sino bibili? Eh, sino pa nagbebenta? Insider. O, mean version din yan eh. So these are the things which, it's counter trend. Ang tawag doon, tama ba yun? Honest? Counter trend yan eh. So it works in the Philippines. On good companies. On good companies. Tama ba yun, Juanis?
Yes, boss.
Hindi siya. Eh, ang daming ginagawa eh. Yung mga iba, trabaho tamad-tamad. Kasi, breakout, sama na ako dito. Hindi pwede yan eh. There's a buy low, sell high. There's a buy high, sell high. For every different market condition. You need to know that. It's free. Available naman sa amin yan eh. Hindi lang ninyo tinitignan. That's why I said, only when you're ready to receive it. It's all there. It's free.
I guess that's why, boss, kapag technicals, sinasabi niyo parati, may cheating na yan eh. So, medyo cheating yung technicals. And then I guess fundamentals, yung pumunta ka sa school, nag-aral ka talaga. At the end of the day, you know you can get a good grade. All right.
The other thing also, there are three things that you need to understand. In technical analysis, there are two. It's predictive or reactive. So, saan ka? So, the predictive, mura na, boom, patay ka. Ubus ka, di ba? Right? That's the problem eh. Then they don't know what you're doing, automatic matatakot ka. Sa atin, it's available naman eh. We teach that. So predictive is being more proactive. No? I think that's the case. Then reactive. Reactive is pag breakout, pull back din nandiyan ka. The problem is pag breakout, hindi bumaba, ayan, hahabol ka. So nagiging fear of missing out na. So mahirap talaga itong trabaho namin. It's a lot of moving parts. You have to know different market conditions. And then what strategy to choose? No? Is it a counter trend? Is it a trend following?
All right.
Pag trend following, trabahong tamad ka. Sorry.
All right, thanks, boss. Can we see the next question, please? All right. What is the PSEi's average PE ratio now? And how does it compare to its historical average? How many percent the stocks in the index are below average PE from Doc DJ?
Okay, I think syempre yung average PE, bumababa rin naman. But I think right now we're around 14 times PE. And that's more than one standard deviation below the mean. Yun na nga, compared to historical, it's around one standard deviation, 1.5. And how many percent of the stocks are below the average PE? Okay, I think 90%. 90% are still trading below their historical average PEs. So yeah, it's a good opportunity talaga. And a lot are in fact trading below book value. Yun, it's that cheap.
And I guess maybe that's why, at least for you guys, I'm pretty sure you're seeing it in the market right now. Parang you're seeing a trend wherein there's a lot of privatization going on. Companies buying strategic interests in other companies. It's likely because of this fact that valuations are really very cheap today.
So yan, yung mga banks, di ba? For example, the Robinsons Bank, I don't know, RCBC, di ba? Yung the recent transactions, you will notice they're all above book value. But the banks, below book. Metrobank pa lang 0.7 times, di ba? And that's after rallying already. So yeah, it just is an indicator that the prices are unusually cheap.
All right. Hopefully that translates also to more upside for the rest of the year. Can we move on to the next question, please? All right. So for Boss Marvin, will it be cheaper or better if we buy direct from insurance companies, their funds? What is the benefit if we buy it through COL?
Good question. Two things. No? First, if you buy direct through the insurance, may mga taga-insurance ba rito?
Meron.
May agents yun eh. They have agents fee. So you have to just better check if when you buy directly to the insurance company, better make sure walang agent fee kasi sa amin wala. If you buy through COL, there's no agent fee. You buy direct the fund. So compare nyo yun. If you can buy directly through the insurance company na walang agent fee, then fine. Pero kung may agent fee, bilhin nyo na lang online. Yun.
Alright, so mas mura sa COL, basically. Alright, can we see the next question, please? Alright, so from SGT again. To Sir Juanis, I'm currently waiting for a pullback to 6.6 to deploy cash. But PSEi is quite resilient at 7K. How do I know if I should just buy at current levels?
I think you probably want to look at this on a per issue basis because there will be some issues that will remain strong and there will be issues that will make the pullback. So if let's say you have a favorites of let's say 5 issues and it may not all happen at the same time, you might get one that corrects first, hitting the approximate targets that you're looking for support, and you can start to deploy there. If the other ones remain resilient, obviously you cannot buy that back, right? It is quite possible some could just correct going sideways. And if that happens, it might be very difficult for you guys to be able to buy back later. Then later, you're going to have to make another decision, which is if it makes a nice tight pattern and it breaks out, do you want to get back, even though that was the same price that you probably took some profits? I mean, being with a technician, value is not a hindrance to me, right? If I see a pattern, I see it break, and I see the potential, all the momentum indicators are in my favor, I go in attack mode. So if I bought and I sold and I need to buy back at a higher price because I think it's going to go higher, I will do it. But remember, earlier Edward said, know what stage of the market you're in. If you're in a stage 1, the chances of you being wrong on a situation and buying on breakout is very high. But if you're in a stage 2, getting faced, buy whatever you want. That thing will move up very, very quickly. So that's why you want to take a macro view and then use it in your micro trading strategy.
All right. Thank you, Sir Juanis. So hopefully we really are progressing to stage 2. Can we see the next question, please? All right. So for April, okay, so more US-based. What do you think should the Fed do to reduce the risk of a hard landing? Should they pause at 5 to 5.25 or cut rates from Mark I?
Syempre, cut rates, di ba? Yeah, to avoid a hard landing, I think they have to cut rates. The problem kasi with rate hikes is they work with a lag. So, hindi pa natin alam what the impact of the past rate hikes, di ba, will bring to the market. So, yeah.
Would you still be concerned though that the trade-off, if they do cut now, would be inflation? Like, would it possibly go up again? Do you think is that a scenario that could be on the table?
Yeah, I think that's what they're worried about. I mean, if you listen to the speeches of Jay Powell, his idol is Paul Volcker, and he keeps on alluding to the Keeping at It, which is the title of the book now of Paul Volcker. And what happened before, 70s, 80s. You look at the charts. So inflation went down, Paul Volcker cut rates, and then inflation went up again. So he had to raise rates again. So I think that's why Jay Powell wants to be doubly, triply sure that inflation is gone before he does anything. Yeah, so yun.
I think April said it right. No, the Fed is really behind the curve all the time. Since they are data independent. Diba? That's one of the reasons why for so many years we're talking about the 10-year US Treasury. Kaya doon ang silip eh. That's where all the numbers are coming out. So that's where you're seeing. No? Now, if you look at, let's say, for example, why the 2-year or the 3 months US Treasury is way above the 10-year. So it's telling you that there's a possible recession because of the normal, we call it the normalization of the Fed. The increasing to 3, 4, 5% is basically just normalizing lang yan. Kasi because of what happened to the global crisis, they went to 0, or even because of the pandemics. That's why they brought the interest rates down to 0. Now they're trying just to normalize it. Now, how do you know when the Fed will pivot? The Fed will only pivot if there is already a confirmed recession, a contraction of the economy. If it doesn't contract, meaning parang ngayon mild recession pa, diba? Walang hard landing, the Fed will never pivot. They will try to control it so that to avoid that parang double dip na umakyat na naman inflation rate. So they need to try to be there. No? But because of just pausing, it gives an opportunity to participate. But at the same time, we know that it's tactical. Diba? Kasi nandun pa yung high interest rates eh. So it's still a buy low, sell high for us in the US. And even in the Philippines, it's still like that. No? So you need to understand, Do not expect the Fed to pivot if there is no confirm ba? Kailangan sinabi, recession na kami. Yan, magpipivot na yung magpipivot na yung Fed. Kung hindi magpipivot yan. It will just stay elevated. And that's the reason why I expect challenges in the stock market is because the interest rates are still high. May comparison ka. Bakit kang pa mag-iisip 4% in the US dito, 6%, 7%. Diba? So this is it's a correlated, inverse correlated. Yeah. So Fed, for me, for us, at least from our Fed will not pivot until there is a contraction in the economy. Na confirmed na nasa newspaper na. No?
So last year lang, 'di ba? For example, we had 2 quarters of negative GDP in the US, which is the technical definition of a recession. But the Fed does not consider that as recession because they need the NBER to announce it and say that it's official because they want the weakness across the board. And for example, the unemployment rate is still very low and yun yung tinututukan nila ngayon eh. But the market is saying, parang we don't believe you. We don't believe you're gonna be hawkish kasi nga, they're looking at each and every indicator. So, okay, let's rewind to the mid-year market outlook. That time, we only highlighted the goods inflation going down. So they said, malakas pang services, malakas pang housing, malakas pa yung autos. But one by one, these are all showing signs of weakness. And the last one right now is the unemployment. So yun na lang ang hinihintay. So that's why the market is hoping that that will be enough to convince G. Powell to pivot. But I think it remains to be seen whether he will pivot or not.
So I think they just laid out there a very interesting scenario, at least in terms of moving forward. So I guess things right now really look good, but just keep at the back of your mind also in terms of what the market is pricing in. It's rallying because it believes that the Fed will pivot. But the Fed will only pivot if there is a recession. So, I'm not sure also how things are gonna pan out, but at least just be mentally prepared that maybe the advances we're seeing today could be capped also at the potential point because April also mentioned the US is expensive, right? All right, okay, so maybe we could move on to the next question, please. Okay, I guess a little bit more specific and something more actionable. So which stocks are below book value? So give a few companies. Thanks.
Magtrabaho naman kayo, nasa investment guide. Makikita naman ninyo yan eh.
It's in the investment guide. Pero okay, siguro sa banks na lang, ang above book value lang, ay yun nga eh. Lahat below book except for BPI and BDO. Ganun kadali. Sa properties, I think yung above book lang is Ayala Land. The rest are way below. The rest. But of course, you know what book value means, no? That is their acquisition cost ng properties na how many years ago. But the reality is, you cannot buy properties at the acquisition cost anymore, di ba? So, that's just to say na sobra talagang mura yung mga stocks, no?
All right. Okay. So just maybe one more question. Sorry. We have a gentleman here who wants to ask a direct question to the floor. And maybe we can entertain his question, then slide to after. Go ahead, sir.
Can somebody check the mic?
Hello, good morning. My name is Dr. Alvin De Jesus. First of all, I'd like to thank COL Premium for the invitation to be here today. I think you guys are doing an excellent job. Thank you.
Thank you.
Kaibigan ko yan, kaya planted.
Actually, si Sir Edward has been a very, very influential person in my life as an investor.
I get free consultation from all my sickness.
I'm a product of KLUM, the executive program, and I follow, the notes of Juanis and April. I'm a fan of yours. I'm a big fan. My question here is, Considering everything that's said today, I guess at the end of the day, what is important for us is kikita ba tayo? So, ang question ko lang sa panel would be, what would drive earnings for the companies in the Philippine Stock Exchange for us to anticipate the move if ever we're going into stage 2 or the beginning of the bull market? Thank you.
Thank you, Dr. Alvin. All right.
I really think it's interest rates. Kasi that interest rates, if it comes down or there's a contraction in interest rate, in terms of the economy in the US, then there will be a shift. Kasi nag-shift na yan sa emerging markets, diba? So we're benefiting from the fund inflows yan. May inflows na tayo nangyayari. Maliit lang, pero may inflows. So can you imagine, the market went up, 7-8%. Just imagine, 3 ka lang pumasok, umakit na 7-8%. So that means most of the big funds outside are really underinvested in the Philippines. And I think Marvin said that a while ago, because we're competing against 6.5-7% Philippine 10-year, di ba? Philippine 10-year Treasury. So may competition yan. Eh. So as interest rates goes down, if a 10-year goes down in the Philippines, switch na yan, automatically, it will go. Kasi, I mean, earnings has been still being consistent, di ba? Double teens pa eh. Di ba? Di ba? This year, di ba? Double
digit pa tayo.
Double digit pa rin eh, di ba? So, it's just really supply and demand lang eh. It's really just supply and demand. Pag bumaba interest rates, automatically upgrade lahat yan. Mag-upgrade ang talaga yung market.
Yeah. So, I guess for the drivers talaga of earnings, well, the resilience of consumer spending, plus falling commodity prices will help on the margins. And then for the banks, of course, the reason why everybody's so excited is because the higher interest rate is leading to higher net interest margin. And since the economy has been resilient so far, meron pa ring loan growth. And did you know, for example, that the banks right now are really making a lot of money because ang daming low-cost deposit. And remember, our current account and savings account right now, for example, hindi naman nila tinaasan yung interest rate eh. Pero pag sa lending, tinaasan nila. O edi, sino kumita, di ba? Sila. That's why everybody's so bullish on the banks. Because yun na nga, as interest rates go up, their cost of funding does not go up as much. At this point at least, because the loan book is still recovering. So, pinapautang nila predominantly is still their CASA, not even their time deposit. Kaya, hindi sila compelled to increase the time deposit rate, notwithstanding the higher interest rate. So, those are the drivers of earnings for this year.
All right. Okay. So now we will go on to our, this is our last question. So it's from Slido. So this is for all of the speakers. What's the biggest risk to your calls and your current views? So I guess if you have more of a more bullish view, what do you think could derail that? If you're tilting a bit more bearishly right now, what could also cause an opposite move? So what's the biggest risk to your calls and your current views? So maybe I could just go through Juanis, April, Boss Marvin, then we'll conclude with Boss Edward.
Well, I agree with Edward. I think interest rates will be the one that people will probably be very sensitive to. So if it doesn't fall fast enough, that will be a problem. And of course, what April said, how bad will it be in the US? Those are the two big question marks that we're currently facing now.
All right. Thanks, Juanis. Interest rates, April.
Are you alluding to my bearishness? So, where can I be wrong? Yeah, I could be wrong if there is a Goldilocks scenario that happens, where despite high interest rates, the US will be fine. And by biglang nagbago si Jay Powell at naging, dovish all of a sudden. And, okay, let's bring interest rates back down. Then, that would be very good for the market if that happens.
All right. Thanks, April. How about you, Sir Marvin?
Yes, sa akin, it's geopolitical. If China invades Taiwan, all bets are off yan. Taiwan is the largest chip maker in the world. Lahat na ng systems natin, delikado. it's not like oil, di ba? Oil is Russia invades, may alternative ang oil eh. Somehow there's US, that's, pag chip maker, medyo all bets are off yun. I think that's the biggest risk to me. Inflation probably is being controlled, interest rates may go down, but geopolitical, wala, black swan tayo dun. Yeah, thanks.
If you're not invested, that's the biggest risk. Can you imagine, you have your active income. You need to have somebody, you're sleeping and somebody is working for you. That passive investment is very, very important. So just allocate 5. Kung takot ka, maski na 1-2% lang. 5 to 10%. Just allocate that. And let them work for you. Let the big corporation works for you. Get the dividend and then reinvest it. So it's save, invest, reinvest. I've been saying that so many times. You need to have that passive investing, that they are working for you. I think that's the biggest risk if you don't do anything about it. All right? Thank you.
All right, great. Thank you so much, boss. So, yeah, there you have it, everyone. You've heard from our experts, and hopefully the insights you've heard today is something that will help you make wiser and smarter investing decisions. So if I may just, I guess, summarize everything that I've heard this morning, my main takeaway, and I think Boss Edward really captured it succinctly. So for me, today, right now, in fact, this is the time to put your money to work. So I think that's pretty clear. So at least if we look at the bond market, so they're giving you a competitive return right now, given higher yields. So coupon payments are at levels where we haven't seen it in quite a while. You can get 5, 6, 7% coupon payments. So how would you participate in fixed income? I mean, we were able to discuss it directly, but if you are interested, I was speaking with a gentleman earlier, and he was telling me wala siyang mabiling bonds at the moment. But from what I've heard, there's probably an RTB coming up in Feb, so that's something you might want to check out. And of course, you can also invest in bond funds through the COL fund source platform. In terms of stocks, you could also put money to work there because valuations are still at very attractive levels. So as April mentioned, so still one standard deviation away from the historical average. Within your stock market allocation, so I understand most of us here are active traders, active investors. I guess the overall recommendation at the moment really is to ride the trend. So far we're seeing it's good. You saw the golden cross. You see that there's a good likelihood in the short term it might continue. So let's just ride it until the market shows firmer signs of turning lower once again. So be that through trend line breaks, negative news flow, or disconfirming price action. So your strength, let's understand, as an active trader, active investor, is in being nimble. Diba? It's being aware of what's going on currently. So if you want to go long some more, just consider buying on pullbacks. Markets are overbought at the moment. And you should also consider flow-based ideas. So for example, April mentioned there, she likes the large caps. And indeed, the foreign money is what will drive the market higher, most likely. They will focus on large caps first. So maybe you could position there initially. And then later on, when the market is a little bit more mature, there could be opportunity and value in the cheaper names, like some of the ones that were mentioned earlier. So if, however, you are a more conservative or measured investor, I mean, ayaw mong bumili agad, you want to study things a bit more, our suggestion really is to accumulate issues that are trading with a margin of safety. So by this, we mean pick stocks that are still trading at a 15% discount to their fair value. So that's easy to see. So just go on to our website, look at our investment guide, you'll see it there. And I would also suggest that you position in themes that could have longer holding power for the rest of the year. Themes that could persist, such as the reopening of China, emerging markets, the Philippines itself. So in that regard, you could bet on the consumption story of the Philippines. So April mentioned her favorite stocks there. You can also bet on the higher interest rate environment. I think it was repeated many times. The banks are a good place to put your money now. They're cheap and they're a beneficiary of high interest rates. And then lastly, you could also consider waiting in defensive issues that pay good dividends. So Boss Edward, like at least for us, I'm part of the investment committee. What we like we like selecting stocks that pay good dividend because the rationale there is the dividend is always something that could help compensate you while you wait for the stock to reach fair value. So that's it for us today. Thank you very much for attending. It was great to see all of you guys. I'll turn you over to Mai for the last announcements.
All right, let's give a hand to Zerge. Thank you for moderating. And to all our experts for your presence here today. They will actually stay until 12 noon. So if meron pa kayong mga tanong, you can personally ask them, okay? And then we also have our research team with us. If you have a stock-specific concern or if you have a question about a research report, you can also ask them directly. So that's it. That ends our program for today. Thank you very much, everyone, for being here. My name is Mai Lubaton. Again, see you soon. Sana sa ating future event. So enjoy. Have a great day po.
Thank you, everybody. Thank you.